Hello, everybody, and welcome along to today's special featured webinar of the Big Sage Payroll Quiz. My name is Calvin, and I will be your host and quizmaster for today. And I am joined by my glamorous assistant, Duncan, who will be driving the slides for today, and he will be helping me present throughout the session. So what we'll do, we'll move into the contents, and I'll talk to you about what we'll be running through today. So we have 3 rounds. First round will be processing payroll. So we'll have 4 questions in round 1. We'll be asking those questions. Then we'll be revealing the results. So we'll be revealing the submissions for each question. Don't worry, they are, of course, all anonymous as well. And then I'll be handing over to Duncan to let us know the answers with a brief explanation and potential demo as well. Round 2 will be pensions. That has 4 questions as well. And then for the final round, we're going to go into a quick fire general payroll knowledge round. So those are the 3 rounds for today. We are scheduled to run for about an hour. So if there is time at the end, we may well have some time for questions, but I cannot guarantee it at this stage. So we'll see how long we've got at the end of the session. So without further ado, let's get into it and start with round 1, which is processing. So I hope you're all ready. We will have the question on for about a minute, so you'll have 60 seconds to answer the question, and we'll be going from there. So question 1, let us launch that now. For this question, what date should you use as your process date in Sage 50 Cloud Payroll? We have 4 options available: the date you're paying your employees up to, the date you're processing their pay, or the date they receive their pay, or the last day of the current tax period. Remember to click on the option you think is correct and hit the submit button, and we'll have the poll running for approximately 60 seconds to let everyone have a chance to get their answers in. Okay, so that wraps up question number 1. So we are going to close the poll now. Hopefully everyone got a chance to answer the question. We will move swiftly on to question number 2 now. So we'll launch that poll now. When should you run the lever wizard? So when it comes to processing levers, when should you run the lever wizard? Is it before enter payments? Is it after enter payments? Is it before update records? After enter payments and before update records, sorry, that is all one answer. After update records, but before submitting an FPS, or is it after submitting an FPS? So hopefully my narration didn't put you off there, as you can all see the answers on screen. Good time at this point as well to mention that question 1 and question 2 is in fact covered in our Get Your Payroll Done webinars, which we do run every 3rd Thursday of each month. So if you haven't attended one of them, be sure to have a look at our schedule and get self-registered if you can. So we run them at 2 o'clock every Thursday. Okay, so time is up for question 2. So we shall close that question. Let's move on to the penultimate question of this round, which is question 3. And we shall launch the question for you now. So this one is a bit of a scenario. You've used the wrong national insurance category for an employee. How would you go about correcting this? Would you change it in the next pay run? Would you roll back and reprocess? Or would it simply correct itself? So you've used the wrong national insurance category for an employee. How would you go about correcting this? Again, a bit of shameless plugging there. We do have an error corrections webinar. So for any of you who have attended that, this could be a good one where you may well find out an answer to this. Okay, so we will wrap that one up. So time is out for question number 3. So let us move on to the final question for this round, which is going to be question 4. So we'll launch that again. When would you submit an FPS adjustment after correcting several previous periods? So you've had to correct several previous periods. You now need to send an FPS adjustment. When would you do this? Either after correcting each period, so one for each period when you're correcting, once all reprocessing is complete, or after completing the earliest period's correction. So at which point would you need to submit the FPS adjustment? Again, similar with the previous answer question, you know that we have our error correction webinar, which does in fact cover FPS adjustments as well. And if you're interested, we have an error corrections webinar happening on the 27th of October as well. So there is one coming up next month. If you'd like to attend that, like I say, we will share a link in the chat later on for future webinars. Okay, so that is time up for question 4. It is now time for a little bit of a bonus, where we're going to have a little bit of a bonus round. So we have an anagram round. So we're going to be revealing the submissions in a moment. But whilst we do that, if you want to note down ball rock, and the clue is you use this to go back in time, and we'll reveal what that anagram is a little bit later on. But firstly, what we'll do is let us reveal what everyone answered for question 1 first and foremost. So we had a bit of an even split, but there is a clear majority there for the date they received their pay for question 1. We shall find out in a brief second now whether or not we are right. So we're going to hide the poll, and I'm going to hand over to Duncan to let us know what was the right answer. So it's over to you, Duncan.
Hello everyone. So question 1, what date should you use as your process date? 60% of you have got that right. It is the date that your employees receive their pay. So this was made clear when the RTI changes came in about 10 years ago, just under 10 years ago, where the date reported in your submissions to HMRC must be the date that the employees receive their pay. But there has been one exception that's come to light since that rule came in. So it's all to do with the administration of universal credit. But if you have a regular pay date and that happens to fall on a non-banking day, you should still set your process date to that regular pay date, even if you're going to be paying your employees a few days early or late. But the general rule there is you should be using the date the employees receive their pay as the process date, as that is what is reported to HMRC when you make a submission at the end of your pay run. So date they receive their pay for question 1.
Thank you so much. So let us have a quick moving on to question 2. So let's again reveal the split in answers. So we shall share the results for question 2. Again, we have a vast majority on this one, which is when should you run the lever wizard? And 89% of you all answered after update records, but before submitting an FPS. And once again, I will hand back over to Duncan to reveal the answer. So again, back over to you, Duncan.
So well done, that 89%, you were indeed correct. It is after update records, but before submitting an FPS. And I do have a quick top tip at this point. So if you're ever unsure about the order you do something in your payroll process, you may not know this, but there is a process map in your software. So if you're on the payroll tasks, which I am right now, you've got this change view option in the top right-hand corner. And if you change to payroll process, you'll see there's a process map with lots of different options. And this really helps you to understand the order in which you should be completing the tasks. So in the case of levers, we have process levers just here. So you can see that is after you've entered the payments. It's after you've updated the records, but it's before you submit a full payment submission. And the reason for that is the final payment needs to be updated. So it's included on the P45 figures. So that needs to come first. The leave-in date needs to be included in the submission. So the lever wizard would be after that, and the full payment submission would be the last of those tasks you do when you are dealing with a lever. So well done to the 89%. Answer C, after update records before submitting an FPS, was the correct one.
Thank you so much again, Duncan. Okay, so let's move on to question 3. And again, we shall share the results. So again, bit of a majority there, 68% this time have answered the same answer with the rollback and reprocess. So this is if you've used the wrong national insurance category for an employee, how do you go about correcting this? So once more, it's time to hand over to Duncan to reveal the answer. Again, over to you, Duncan.
Thank you very much. So yeah, about 2/3 of you were correct. You will need to roll back to the original period the mistake was made in and reprocess. So a bit different to pay as you earn tax if you're on a cumulative tax code and you missed a change of tax code in an earlier period. Cumulative nature of the calculation is you just change to the next pay run. But with national insurance, for non-directors and for table method directors, you will need to go back to the period you first made the mistake in and reprocess the pay on the correct NI category. So it's not going to correct itself. It would be lovely if it did. Not as simple as changing it the next pay run. With this one, you do need to go back, and I'll be giving you a demo after the next question on the rollback wizard and also on those FPS adjustments. So back over to you, Calvin.
Thank you again. So we're going to now reveal the final answer for round 1, and then we'll be revealing what that anagram was. I hope you've all had that jotted down. Just as a quick reminder, it was ball rock. So before I reveal, let's share the results. So yeah, again, we did have a bit of a majority on this one, slightly less this time, so a bit more evenly spread. But 58% of you have answered after correcting each period. For when should you submit an FPS adjustment after correcting several periods? And once more, it is time to hand over to Duncan to reveal which one was the right answer and who got it correct. So over to you, Duncan.
Right, so this one is very well done to the 38%. So an FPS adjustment would only be done once after completing your reprocessing. So it's not actually possible to submit an FPS adjustment for a historical period. It can only be submitted in respect of the last FPS you actually sent. So any correction that affected a previous period would be incorporated into the year-to-date values in the FPS adjustment, but you wouldn't be able to do an individual SPS adjustment for the earlier pay periods. So you only do it once all of the reprocessing is complete. And for this question and the previous one, got a quick demo for you just to demonstrate that process. So let's take a look at someone where we need a rollback due to an incorrect NI category. So I have an employee here. If we take a quick look in their record, you'll see I've currently got them on NI category A. But looking at their date of birth, just turned 66. They've actually just reached state retirement age, state pension age. But for the last 2 months, since they became that age, I have processed them on NI category A. So that was a mistake. We will need to put that right, and we're going to use the rollback option in order to do that. So first of all, I'd make sure I've got all of the copies of pay slips so I know what was originally paid to this employee. It makes it easier to work out how much extra we need to give them. And then if I go into the tasks menu and down to rollback, we'll take a backup if you don't already have one. And then in the rollback wizard, make sure you've selected the right employee and then choose the earliest period that you want to correct. So in my case, it was the July pay date, was the first pay date. They should have been on a different NI category. So that's what I've selected. I'm going to complete the rollback wizard. And what that does is it rolls back that employee's history. So the last updated date is now showing June. And looking in the history, in the employee record, you'll see that the July and the August information has now been removed. So what I can now do is I can set the correct NI category. And actually, you would see warnings when you're in enter payments. So hopefully you would avoid this problem in the first place. And then I can set my date back to the first pay date that I need to correct, 31st of July in this case. And then I would go back in and enter the original payments. So the payments don't need to be corrected. It was the NI category. And as you can see, the NIC is now reduced to 0 for this employee. Now they're on category C, and as a result, their net pay has increased. So if I'm happy with them payments, I'd print a pay slip so I can issue it to the employee. We would then update this period. So I'm going to update month 4. However, we wouldn't be able to submit an FPS adjustment for month 4. And if we try, If I click on the FPS adjustment option, we'll be told just that. You're unable to submit an FPS adjustment for this employee. Refer to the help. Basically, you've already submitted an FPS for a future period, so you can't send an adjustment for this earlier period. But it's not a problem, because once you're back up to date, so I would just need to re-enter my August payments for this particular employee, noting that the net pay has changed, the national insurance has changed. I'm happy with the other payments though. I would print a new report, new pay slip for them. I would update the records, which I will do just now. My reprocessing is now up to date, so I can give out those replacement pay slips, make sure I pay them the extra that they're owed. And at this point, I can send an FPS adjustment. So if I go into that right now, it's going to ask you why it's late. And the reason for any correction is reason code H, correction to an earlier submission. And then if we run through the FPS adjustment screens, that's going to submit the liability adjustment in respect of month 5 and all of the adjusted year-to-date values for month 4, so including month 4. So when we click submit, that's then sent through to HMRC, and they can then adjust their records with the details of that correction. So there's your demo on rollback and FPS adjustment. And we'll hand back to Calvin for the answers to the anagram.
Thank you so much, Duncan. So yes, before we wrap up round 1, just to recap that bonus anagram. So the anagram itself was ball rock, and the clue was to use this to go back time. Now, if Duncan could kindly reveal the answer using the slides, you'll see that a little bit of a clue is in the demo that Duncan has just done. The answer is in fact rollback. So bonus point to anyone who answers that correctly. Okay, let's move on to round 2, and it's everybody's favorite payroll topic, pensions. So we'll get things kick-started with question number 5 in total, or question 1 of round 2, and we'll launch that one straight away. The question is, where can you find the current qualifying earnings thresholds and earnings trigger, in Sage 50 Cloud Payroll? So there's 4 options even. Payroll, then enter payments. So that's payroll in the bottom left of the program. Payroll in the bottom left, and then pension assessment. Or would you go to company in the bottom left, and then legislation, which would also be in the top left? Or would you go to company and then pension module settings? So this is where can you find the current qualifying earnings thresholds and earnings triggers in Sage 50 Cloud Payroll. Very useful one to know this. There's a lot of information that you can find here. So there's a little clue for you all. And we have recently, yesterday, in fact, we had a pensions webinar, and the answer to this was revealed in that. So anyone who has attended that may well already know, hopefully. If not, you can find a recording available via the Help Center and the Webinars tab at the top. Okay, so time is in fact up for this particular round. So I am going to have to close it right now. Unfortunately, if you haven't managed to get your answer in, you've got 1 more second before I hit the close button. There you go. We're now on to question number 6. Question 2 of round 2. We shall launch that one. Again, 60-second time limit. Question 6 is, when using qualifying earnings, how is the pensionable pay calculated? This was again covered in yesterday's webinar. So is the pensionable pay calculated from the total gross? Or is it from the gross pay minus any deductions? Or is it from the earnings between the lower and upper thresholds? So when using qualifying earnings, how is the pensionable pay calculated? Okay, time is up. So we will close that question down, and we will move on to the next question. So we have question 7, which is the penultimate one of round 2. We'll get that launched for you. So this one, how long does an employee have to opt out of a workplace pension? So how long have they got to opt out for the workplace pension? They either have 1 month from their active membership date, 6 weeks from their enrollment date, or 5 months from your staging date. So how long do they have to opt out of a workplace pension. Just a quick reminder as well at this point that a recording will be available of today's session when the session ends. So it usually comes about an hour after we end the session to give it time to process. So keep an eye out for the email if you ever wish to play along again, or if you want to play along with some of your colleagues even, or just recap for some of Duncan's demos there as well. So a recording will be available to you about an hour after the session has ended. Which leads me nicely into the 10-second warning for this particular question, where we'll be closing that and moving on to the final question of round 2. Okay, so there lies the end of this particular question. Time is up for that one. It is now time for the final question of round 2, or question 8 in total. So we'll get that one launched. So question 8 is, how often do you need to re-enroll employees who have opted out or left your pension scheme? So how often do you need to re-enroll your employees who've left the pension scheme? Either every 3 years, every 6 months, or only when they ask to opt in. Shall give a clue for anyone who knows the history. A lot of companies will be coming around to the second time that they'll need to do this in potentially their entire payroll journey. And that gives a little bit of a clue. We did have a re-enrollment webinar as well, so you can find that recording, as I mentioned earlier, in the Help Centre. So at sage.co.uk/help, then select Sage 50 Cloud Payroll, and then in the top right-hand corner, you'll see a little button that says Webinars. That will direct you to the schedule, which also has a link to all of the recordings. So if you want to check out any previous webinars or join any future ones, head on over to there and you can have a look. We do update that regularly, monthly, with the next month's schedule. So we're already scheduled all the way up to the end of October, so you can have a look there as well. Okay, so that is the time up for this particular question as well. And that wraps up round 2. So yet again, we do have a bit of a bonus for you all, which is another anagram. If you wish to, by all means, you can put your answers in the questions and let us know what you think it is. But this one is no spine. So again, the clue here is you might need this when you're older. And with that being said, it is time to reveal the answers. We'll firstly reveal what has been answered, and then we'll be handing over to Duncan to reveal the answers again. So question 5 was, where can you find the current qualifying earnings thresholds and earnings trigger in Sage 50 Cloud Payroll? If I bring up the answers there. Again, we had a good majority, 59% go to company and then legislation. So that's company in the bottom left and then legislation. So it's now time to reveal the answer by Duncan. So it's time to hand over to you again, Duncan, and let us know who was right.
Thank you, Calvin. So congratulations to 59% of you who said answer C. It's within company and legislation, but it's not just auto enrollment legislation that you can find there, as I will show you just now. So really useful place to find all of the payroll legislation you could ever want to know. So from your company tasks, just hit this legislation option just here. It'll show you the legislation settings for the tax year that your process date is set to. So 22 to 23 for me. And for auto enrollment, we'll find our lower threshold, earnings trigger, and upper threshold on this tab just here, as well as the minimum pension contributions. But as well as that, you can always check things like statutory payment rates, £99.35 for SSP. You've got your parental payment rates, student and postgraduate loan thresholds. There's all sorts, PAYE, national insurance. So check these out if you are ever unsure about some legislation. And if you want to check something in a previous tax year, another top tip for you, just set your process date back to that tax year. So 5th of April 22 is the end of the previous tax year. And from there, if you wanted to check any legislation, that'll bring up your legislation settings for 21 to 22. So really handy place to find all of your payroll legislation. And that is also the answer to question 5.
Thank you so much, Duncan. So yes, we are now on to question 6. So this was about when using qualifying earnings and looking at pension calculations. So again, we shall share the results. Quite an even split. I think this is the closest we've had between answers. We've got a 50% majority there. So half of you have guessed from earnings between the lower and upper threshold. So it is now time to hand over to Duncan and to see who is correct. So over to you, Duncan. Let us know what is right.
So this one is answer C. So well done, 50% of you from earnings between the lower and upper threshold of qualifying earnings, which currently monthly is £520 lower and 4,189 upper. And a very quick example of a pension calculation where a scheme uses qualifying earnings. So if we take a look at my pension schemes, you can see that my scheme is flagged as using qualifying earnings for pensionable pay. So it is going to restrict the pensionable pay between those thresholds that we looked at. And if we have a look at an employee who's in the pension, hopefully employee 1 is. So getting total pay of £2,500, and we can see the pension contributions for the employee is just here, and for the employer is down here. So how was that calculated? Well, if I bring up a handy calculator, £2,500 below the upper threshold, so I just need to deduct the lower threshold. That gives us our pensionable pay for the employer. It's a 3% contribution in this example, so that's your £59.40. And for the employee, it was a 5% contribution, but this particular pension scheme is deducted after tax. So 80% of that amount is the employee's contribution of £79.20. So pensionable pay in that example is between the lower and upper threshold of qualifying earnings.
Thank you very much, Duncan, again. Okay, so penultimate question for round 2, which is about to be shared right now. So how long does an employee have to opt out of a workplace pension? So again, we got a fairly even split, nearly 60-40 there, with 2% of you going for the 5 months from your staging date. Majority going with 1 month from their active membership. So again, we're about to hand over to Duncan, and let's see who was right. So again, over to you, Duncan.
Yeah, you've got it again. It is answer A. It's 1 month from their active membership date. So the 6 weeks from enrolment date is the deadline to send them the relevant documentation. So you need to write to them within 6 weeks of their enrolment date. 5 months from the staging date was when you had to initially register with the pensions regulator. But the answer to this question is 1 month from their active membership date, which is the later of the date that you sent them a communication telling them they've been enrolled, or the date that their details were processed by the pension provider. They can, of course, opt out or leave a pension, to give it its correct term, after that 1 month window, but they would not automatically be entitled to a refund. So back over to you, Calvin.
Thank you again, Duncan. Okay, so we are on the final question of round 2 to reveal. So first and foremost, let's reveal the results. I'll have a look at what was answered. A big majority on this one. We've got 89% saying every 3 years. So this is about how often do you need to re-enroll employees who opted out or left your pension scheme. So with that big majority, it is time to find out if the majority of you are correct. So over to you, Duncan.
Yes, of course you are. It is every 3 years. So originally it was called triennial re-enrollment, got changed to cyclical re-enrollment, or just re-enrollment if you want to keep things simple. That happens every 3 years based on the anniversary of your staging date or your previous re-enrollment date. You can actually choose what date you want to re-enroll from within a 6 month window, 3 months before that anniversary or 3 months after. And I have got a quick demo just to finish off this section. Just going to show you the re-enrollment process for those of you that do have our pensions module. So I'll just come out of the previous screen that we were in. And for this particular demo, we have a re-enrollment date of the 1st of July. So we're actually going to be completing our re-enrollment as part of our 30th of June pension assessment, because that is our pay date, the that falls into the tax month of the re-enrolment date. That was all done via the pension assessment option. So once you've been through and entered everyone's payments, you'd go into the pension assessment, and when you've hit your re-enrolment period, you'll see a message that looks like this. You've reached your cyclical re-enrolment date. You've then got an opportunity to change re-enrolment settings, and there's one setting that a lot of people might want to change, because you do have the option as an employer of excluding anyone that opted out or left the pension in the last 12 months from the re-enrolment activity. So if you've only recently taken on a new starter, they opted out, it would mean that when you come to re-enrolment, if it was in the last 12 months, you don't have to put them back in. So I'm actually going to go in and change the settings so that we are excluding those employees that fairly recently opted out. But once you're happy with your settings, you would just run a pension assessment as normal, making sure you take that all-important backup. And when you're into the assessment screen, this will flag up the employees that needed to be re-enrolled. So I'm expecting to see some flags on the left-hand side of this screen, but of course, doesn't seem to have worked for some reason. So you can tell we're coming to you live. We'll give it one more go. See if it works this time. Okay. Well, unfortunately, I can't show you the demo, but if you do want to catch up on a recording of our re-enrolment webinar, it is available from our webinar recordings. But what you should see in that screen is the flags next to those that have been re-enrolled. You can then produce the pension data to send to your provider to get them back into the pension, and then they have the opportunity again to opt out within 1 month of the active membership achieve date if they want to come back out of the pension. But that re-enrolment happens every 3 years. Apologies for the technical issue there with the demo, but back over to you, Calvin.
Thank you again, Duncan. Nothing like a bit of a technical issue to prove to you guys that we are coming to you live and speaking to you, not through a recording, but it is in fact actually us. Okay, so let's get on to the anagram and let's reveal what round two's anagram was. Now, I saw a few guesses come through in the questions there, and the good news is if Duncan would like to reveal the answer, you all got it absolutely spot on. The answer was in fact pension. So no spine did then turn into pension. So that was our anagram for round two. It is now time for round three. Now we have 7 questions here. So this is going to be a quick fire round. All right, so we are going to reduce the time that the poll is on. So be ready with mouse in hand or touchpad if you're on a laptop and you don't have a mouse, of course. But we'll go and get things started with question number 9, which is, in what year was pay-as-you-earn introduced in the UK? Now, was it 1934? Was it in 1944, 1954, or 1964? So what year was pay-as-you-earn introduced in the UK? Okay, so the 10-second warning is in place at this stage. As I mentioned, we do have 7 questions to go through in this one, so we are going to be reducing the time a little bit, make it a little bit more challenging. Okay, so time is up for this particular question. So we are going to be closing that poll now. And we'll be moving on to question number 10. So we'll get that launched early. Again, 45 seconds. So how many different statutory parental payments are there? So is there 3 statutory parental payments? Are there 4? Or is it 5 different statutory parental payments or 6? So those are your 4 options. How many different statutory parental payments are there? Okay, so again, 10-second warning is in place right now. So sure that you are getting your answers in. If you are like me, I'm sure you'll be going through them in your head and counting them as you go. Okay, so that is time up for question 10. It is now time to move on to question 11. We shall launch that one as well. So quite a recent one, this one. How much was the uplift in national insurance contributions from the 6th of April 2022? So a bit of a hot topic, this one. Was it 0.25%? Was it 1.25%? Was it 12%? Was it 13.8%? If any of you who attended our payroll year-end webinars, of course, you will know that this was a bit of a hot topic back then also. We did cover that quite in depth and went through it in those particular webinars. But as the change came from the 6th of April, they were included in the year-end stuff. Okay, again, 10-second warning is in place, and we will be closing it very, very shortly. Okay, so that is the end, and time is up for question 11. It is now time to move swiftly on to question 12. So we will launch that one. Again, a very recent one as well. So what did the annual primary threshold for national insurance increase to on the 6th of July, which was 3 days before my birthday, if anyone is interested? But we have £9,100. Did it go to £10,000 or £12,570, or was it all the way up to £50,000? So on the 6th of July, the national insurance primary threshold for annual amounts did change. What did it change to? And I don't know if anyone's seeing a theme here, but we also covered this in a webinar back in June as well. It was the new version 28.02 when that was released. We covered these changes there as well. Okay, so time is up for question 12. So we shall move on now to question 13. We're nearly at the end. What percentage can a business claim for small employers relief? So if you are eligible for small employers relief, what percentage of statutory parental payments can you reclaim? Is it 90%? Is it 92%? Is it 100%? Or is it 103%? So what percentage can a business claim when eligible for small employers relief? As you know, you can claim your statutory parental payments, so paternity and adoption. If you are eligible for small employers relief, what percentage of that can you claim back? Okay, so time is up. It is time to move on to the penultimate question. Never thought penultimate would be a word I had difficulty with, but there we go. It's question 14. Which is the last tax year that HMRC will accept for an EYU, or an earlier year update for? Was it 2018-2019? Was it the 2019-2020 tax year? Was it the 2020-2021? Or was it the most recent one, 21-22? Okay, and time is up for that question now. So we'll move on now to question number 15, and our final question of today's session. An employee's national insurance category changes from category A to category C. Does the employer's contributions rate go up, down, or stay the same? So those are the three options. Does it go up? Does it go down? Or do they stay the same? This is when an employee's national insurance category changes from A to C. What does the employer's contributions do? Okay, so that is time up for the final question. So we shall close the poll down now. And that's round 3 and our final round completed. But before we start revealing, as I mentioned, we do have another anagram for you all. So again, if you want to pop in your answers in the questions part of the webinar today, you most certainly can. So the anagram is I spy pals. And the clue there is show me the money. Okay, so let us start revealing the answers for round 3. And we shall start with what year was pay-as-you-earn introduced in the UK? Again, fairly even split with this one. but we do have a slight majority for 1954. Now, I'll be honest, I did trip up Duncan with this earlier, so I'm going to hand over to Duncan, to reveal the answer to this one.
Okay, so I've triple checked this one, and the answer is 1944. So a little bit before our time, Calvin. So it's nearly 80 years ago, if my maths is correct, when pay as you earn was first introduced into the UK.
Thank you so much, Duncan. So yes, fortunately we do have a member on the team who was around then and reminded us that it was in fact 1944. Okay, so we shall move on to the next question, and again we shall share the responses. So how many different statutory parental payments are there? Again, fairly even split once more, but we do have just shy of a 50% majority there for 3. So a lot of you have chosen 3 different statutory parental payments. So again, what we'll do now is hand over to Duncan, who shall reveal the answer. So over to you again, Duncan.
So we've caught quite a few of you out on this one. The answer to this one is C. There's 5 different statutory parental payments. And they are statutory maternity pay, statutory paternity pay, statutory adoption pay, shared parental pay, and the most recent one, statutory parental bereavement pay. So that is your 5. I'd have accepted 6 because in the programme, statutory paternity pay is separated for the cases of adoption as well. But the answer we've gone with here is 5.
Thank you so much again, Duncan. So yes, did catch a few out there. There is 5, but again, like Duncan mentioned, 6 is acceptable due to the splitting out of the adoption. Okay, now we're on to question 11. Again, we shall share the responses. Now, this had an overwhelming majority of 95% of you going with 1.25% for that national insurance uplift and the 6th of April. So we'll probably make this one a little harder next time because this seemed like a bit of an easy question, but we'll hand it over to Duncan to reveal whether you were all right or not.
You certainly were. It was 1.25% uplift in NICs. It's on my payslip. It's on many people's payslip. We added a payslip feature, a payslip comment feature in, so you can include that text, which is an ask from HMRC. So yes, that was increased to pay for health and social care by 1.25% for both the employee and employer. But obviously things change and things may well change in the future with regards to that.
Thank you so much, Duncan. So yes, if anyone has been watching the news, that uplift may well change. So watch this space, and if it does, we will certainly have a webinar on what will be impacting in the program and how to go about processing, if anything, in that. So keep an eye on either the Help Centre or that webinar article for that potential change that might be happening. So we're on to question 12 to reveal the results and the submissions first of all. Again, we had a fairly big majority here of 81% of you going with 12,570. And this, if you remember, was the news everyone got excited about when they should really be getting excited about my birthday. But it did mean that a few people got a few extra pennies in their payslip. So can you reveal the answer for us, please, Duncan?
Yes, I can. And 81% of you, well done, got that right. It's £12,570, the same as the personal allowance for income tax. So it brings the point at which you start paying national insurance and PAYE tax to the same level. That's the annual equivalent, remember. So for this year, it kicked in from the 6th of July. Next year, that'll be the threshold throughout the year as well, you'd expect.
Thank you again, Duncan. And of course, if that were to change at any point, we would be ready on hand for a webinar to make sure you were all ready and raring to go with any potential program changes. It is now time to move on to question 13. So what percentage can a business claim for small employers relief? So are you eligible for small employers relief, and what percentage can you claim back of statutory parental pay? Again, we have a bit of a split there, but 39% hit a majority, so there was a clear majority still of 103%. So once more, it's time for Duncan to reveal the answer. Over to you.
So the answer is indeed 103% for a small employer. You qualify for small employers relief if your total national insurance contributions were £45,000 or less in the tax year prior to your qualifying week. And it's 100% of the statutory payment you're reclaiming, plus a further 3% NI compensation. So that's your total of 103%. And the setting for small employers relief, should you need to select that in your software, is found within company and settings. And over on the right hand side, there is a checkbox that you'll need to select if you do need to claim that higher small employers amount from your statutory payment. So it's this one just here. You need to select that before you process a statutory payment if you need to reclaim the small employers relief percentage.
Thank you again, Duncan. So we are on to the penultimate question as well, and we'll reveal the responses for this. So again, which was the last tax year that HMRC will accept NEYU for? We did, this potentially was the closest question across the board, with two answers being evenly matched, but there was a slight majority for 21-22, which is the most recent tax year. So it is now time again to hand back to Duncan to see who was right. Over to you, Duncan.
Okay, so 26% of you were right, and it was the 26% that went for 2019 to 20. So corrections for tax years 2020 to 21 onwards can still be submitted, but you do that via an FPS adjustment. And I think the reason why many of us didn't know specifically what tax year it was is because we made it so simple in the program to pick the correct submission to make. And actually, if you do need to correct an earlier tax year, I'll just show you very quickly where you can find the option to submit an amendment for a previous tax year. So what this option does, depending on the tax year you've corrected, it'll choose the appropriate submission. So anything after 2019 to 20 sends it as an FPS adjustment. 2019 to 20 or earlier, it will have sent that EYU, which isn't acceptable for tax years 2020 to 21 and onwards.
Thank you once more. So it is the final question to reveal now. So again, we will share the responses. An employee's category is changing from A to C for national insurance. Does the employer's contributions rate go up, down, or stay the same? And we did have a big majority again of 61% of you saying stay the same. And it's once more time to find out if the majority of you were correct. So again, it is over to you, Duncan.
Oop, a bit too far there. Yes, you were correct. It stays the same. A little bit of a trick question. It's the employer's contribution we were talking about. So if you did say down and you were thinking of the employees going to 0%, I've tricked you. It stays the same for the employer. They continue to contribute their 15.05% on earnings above the secondary threshold. The employee's rate will have gone down to 0% from the first pay date after their state pension age birthday. So that one, we tried to trick you, but no flies on 61% of you.
Yes, very well done to everyone who got that correct. We have a bit of a bonus round anagram, which is the I Spy Pals and Show Me the Money. Now I can see a few people got the anagram in the questions, so we saw the responses coming through. Duncan, can you reveal if they are correct, please? They are spot on. Every single person who popped in their answer in the question got it exactly right. It is in fact pay slips. So that concludes the main body of the quiz today. But first, I want to go through a bit of further support for you all. So Again, I hope you've certainly enjoyed today's session. It was something brand new that we were doing to celebrate National Payroll Week. And we've gone through fairly different topics. I mentioned we've got webinars going on as well, but we do have further support available to you if you have got any burning questions that you need to ask once the session's ended, or if you're doing your payroll in general. The first one is the Help Center. So we have our dedicated Sage 50 Cloud Payroll Help Center. So head on over to sage.co.uk/help. I mentioned earlier, you can find the webinars here as well, but you can also search our knowledge base of a variety of different articles. We have our wonderful virtual assistant Peg here as well, who can certainly help you with queries and not only directs you to the right guide, but actually walks you through certain steps as well. There is videos and of course the get in touch options there. We also have our Sage membership. So what is Sage membership? Well, this is free for everyone. All you need to do is set up use Sage ID, but you get access to Sage University, so sageu.com, sagecity.com, as well as our masterclass as well. So there's a bit more information available to you on this slide, and as I mentioned, we will upload a copy of that handout to you in the next few seconds. At this stage, however, I just want to say thank you to everybody who has joined us for today's session. As I mentioned, it is something we were experimenting with and trying new to make it a bit more fun and engaging, and hopefully you did learn a few things and got a few top tips from it. It was to celebrate, of course, National Payroll Week. So a big thank you to everybody involved in payroll across the country and obviously using Sage products, which is absolutely marvelous. As you know, employees are the lifeblood of most businesses, and without payroll, those employees wouldn't get paid and therefore would not exist. So you can honestly say that anyone who is processing payroll for a business is the beating heart and soul of that business. So big thank you from both myself and Duncan to all of you guys who are out there tirelessly working and paying the country their hard-earned wages. So thank you again. You will be presented with a short survey when you come to exit the session or when we end it. It would mean a lot to both of us if you could kindly fill that in and let us know what you thought. If you loved it and we found that this is a popular feature, then maybe we will do more quizzes like this in the future and potentially start bringing in some prizes for the winners of said quizzes. Who knows? But it will all depend on the feedback that we get. Of course, if you hated it, don't worry, let us know. We won't be upset or anything. We'll just know not to do it again. But of course, if you did love it, we'd love to hear from you. So I really appreciate if you would take some small time to fill that in. In the meantime, again, thank you so much. I'll stick around for a couple more minutes because I can see there's been 2 questions popped into the chat there, and we'll just wait until they've been answered and then we'll wrap it up. But again, I hope you're all having a wonderful week. I hope the businesses you're involved in are celebrating National Payroll Week as we are here in Sage, and celebrating all that you do for the payroll profession in general. Again, it's been an absolute pleasure to see so many of you attend today. It'd be interesting to see the scores. So again, if you fancy it, let us know what you got your score as. But in the meantime, I can see that all the questions have been answered there. So once again, thank you again, everybody. Look after yourselves out there. I hope you're still staying safe, and hopefully we'll see you soon in a future webinar. So thanks for watching, and we'll see you again soon. Thank you.